7 things you have to know when you're buying a house on land contract. Pretty simple. So basically all I'm going to go over is just how to buy a house on land contract and refinance out of it. Pretty simple because it's actually a pretty popular thing to do in Michigan and some other states. I see a lot of land contracts in Indiana, Illinois, and lenders get confused. They're not really sure how to refinance people out of land contracts. A lot of times people call me and say that their lender said that they had to do it as a purchase and that they had to bring, all the closing costs to the table. And a lot of times it ends up that we can just do it on just a regular refinance. So I'm just gonna go over all the stuff that you need to know if you're gonna buy a house on land contract and how to basically set yourself up for success if you're gonna be wanting to refinance out of it. So just going straight into it. Basically, buying a house on land contract is a really great option if you don't meet traditional lending guidelines. It allows you to really get a private mortgage through the seller and finance the home. You own the house. You pay taxes, it's your house. And so it's not like rent to own or lease purchase or something like that. It's actually you own the house, but except for having a mortgage through ABC Mortgage Company, you have it through Mr. Smith, the seller. So here are basically 7 things you have to know when you're buying a house on land contract. First of all, why would a seller want to sell you a house on land contract? Well, either they just know that the house won't pass a traditional inspection for a lender. So the first thing that you want to understand is the condition of the property. So selling on land contract for a seller is an attractive route to go because they know they don't have to meet the bank guidelines. The issue is that most land contracts have a balloon payment on them. So this means that your expiration date on the land contract says that you need to pay the entire existing balance at a certain date, usually 5 years or less. So at the time when the balloon is due, you'll need to pay the remaining balance, and you'll either do that by refinancing or paying the house off in cash. So at that point, if you do need to refinance it, you're back at square one dealing with the bad condition of the property. So it's in your best interest to get an inspection prior to purchasing the home, at least just to know what you're getting yourself into. And this way you can address any issues on the property, over the course of the next 12 or 24 months. Number 2, next piece that you need to know, so you want to have a paper trail of the payments when you're on land contracts, because since the land contract is usually a temporary solution, it's important to keep a paper trail for everything so that when it is time to refinance, it's easy to get a paper trail of how you made your payments and everything like that. Typically, you'll need to show at least 12 months recent payments, but you might as well keep a paper trail for all of the payments that you're making from start to one, just to establish good habits and set yourself up for success when it's time to refinance out of the land contract. Do not make your payments in cash. Make it easy for the payments to be verifiable. The reason it's so important to show verifiable payment history is because unlike traditional mortgage, a seller finance loan is not reported on your credit report. So this makes being able to show evidence of on-time payments crucial. Number 3, the terms of the land contract. Buying a home on land contract allows for a certain amount of flexibility on terms, rate, and down payment. So anything really is negotiable, but the seller is mostly in control because they're acting as the lender. So typical terms on a land contract are like a 15 or a 30-year amortization with usually a 5-year balloon. This means that the payment made every month is going toward principal and interest. I do see some land contracts that are interest only. It does happen, but typically it's principal and interest. So basically, at the beginning, just like a normal mortgage, there's a large portion of the payments going towards interest. Very small is going towards principal. As the months go by, more and more goes towards principal and less towards interest, just like a regular loan. This is the best part about buying on land contract instead of renting. Because just like any traditional mortgage, you build equity on the home as the years or months go by. So not only do you accumulate equity naturally through market appreciation, but you also build equity by paying down the balance slightly every month. Number 4, fair market value. So when not having to deal with traditional lending guidelines, part of that means you don't have to deal with low appraisal issues when buying the house on land contract. This is both a good and a bad thing. Good, because you can still proceed with owning the home even if it's not worth what the land contract is calling the purchase price. It's bad because if the appraisal comes in low, you're essentially buying a house with negative equity and hoping the value goes up in the near future. On a lighter note, it might not be such a bad thing because homes sold on land contract are often in disrepair anyways. So a low appraisal may be expected, knowing that you're going to be making the updates needed in order to bring the value up. So keep in mind, just because you spend 20 grand on a kitchen, that doesn't necessarily mean the value is going to go up by $20,000. Every market's different. The amount you spend on updates doesn't necessarily equate to the amount of increase in value. Fair market value is based on sold prices of similar homes in the area that have similar amenities and condition. Number 5, down payment expectations. It's not uncommon for a seller to expect 10 to 30% down on a land contract. It's extremely rare to see a land contract where the borrower puts down 5% or less. It's rare, but it does happen. Keep in mind that the seller is usually looking to sell the home in order to get proceeds of the sale to purchase a new home or to relocate. If the down payment is very little, the seller won't be able to accomplish their goals in many cases. The idea of the land contract is to provide a win-win situation for a unique scenario. The buyer gets to own a home, even if they have unique income or credit circumstances, and the seller gets to sell their home, even if there's some unique property conditions. But if selling means they don't get any funds up front, it may be a challenge to come to terms with the seller. But if selling means they don't get any funds up front, it may be difficult to come to terms with the seller on it. Number 6 thing to keep in mind with a land contract, when buying a house on land contract, when to refinance. So you want to refinance out of the land contract as soon as you can. Rates on land contracts are typically higher than traditional mortgage rates, so why stay in that loan longer than you have to? Make sure there's not a prepayment penalty on the land contract because you want to be able to refinance as soon as you can without penalty, right? A prepayment penalty is when you're charged a fee for paying off a loan prior to a certain date. If the land contract has been in place for less than 12 months, the lender is going to need to treat it as a purchase, just so you know. So here's an example. Let's say you buy a home on land contract May 2016 and you're looking to refinance out of it December 2016. Since you're in the land contract less than 12 months, the new lender, regular traditional lender, is going to treat the new loan as a purchase loan. The downside is that you cannot use the new value on the house, even if significant improvements have been made. The value will be the lesser of the purchase price or the appraised value. After you've been in the land contract 12 months, you can use the new appraised value. Now, there are some cases where if you do a great job documenting the improvements that you've made and you can justify to the lender and to the appraiser why, or how the value has improved so much, there are very few cases where that new value can be used. But just to have the right expectations, understand that the new value probably isn't going to be able to be used until you've been in it for 12 months. Number 7. Number 7 thing to keep in mind when buying a house on land contract. Is it recorded or is it not recorded? When it's time to refinance, it's very important to understand whether or not the land contract was recorded with the county when you purchased the home. Typically, you'll know by looking at a recent real estate tax bill. If your name isn't on the bill, that means you're probably not the owner in the eyes of the county anyways. And the land contract probably wasn't recorded. Don't worry, it's not the end of the world if the land contract wasn't recorded. Conventional mortgage guidelines say that as long as the land contract has been executed for 12 months or more, the new loan can be treated as a refinance, which is pretty sweet. However, if you're seeking a government loan, like an FHA loan, the land contract needs to be recorded for 12 months in order for it to be treated as a refinance. If you've been in the land contract for 12 or more months and it wasn't recorded, you won't be able to treat it as a refinance, but it will need to be treated as a purchase on an FHA loan. The biggest issue with that is the value, having the lesser of the purchase price on the land contract or the current market value. Simple solution, just see if you qualify for conventional guidelines instead of doing FHA. Conventional it makes it a lot more simple when refinancing into conventional out of land contract. FHA just makes it a little bit more tricky. That's pretty much it. Buying a home with seller financing can be a fantastic temporary solution for unique circumstances. If the intention is to live in the home long term, it's crucial to do the appropriate research in order to set yourself up for long-term success and be able to refinance out of it. By the way, if you do have unique circumstances, you may be a good candidate for a portfolio loan. Basically, a portfolio loan is where you don't necessarily qualify for normal guidelines yet. So let's say that land contract is getting ready to balloon and you still don't meet conventional guidelines or FHA guidelines. Maybe a portfolio loan is a good solution so that you can get that seller paid off and not have to worry about them foreclosing, or you have to worry about selling and moving. So a portfolio loan may be a good solution. Just keep that in mind. Thanks for stopping by. Appreciate it. We'll see you soon. Don't forget to subscribe for all the latest and greatest on mortgage stuff, real estate stuff, portfolio lending, and how to get approved in unique scenarios. Thanks guys, see you soon.